How's it going, everybody? Let's get you guys all in.
Me and my husband were on the vehicle because he was.
Looks like we got a good crew. Ryan, I'm going to make you a co-host here. How's everybody doing?
How's it
Wayne,
going, Stockton?
the goatee's looking as good as always, Wayne.
Thank you.
Awesome. Okay, good group so far. I'm sure we'll have a couple more trickle in. Let's see, Ryan, do we have Marty on here? It looks like we do. Yes, I see you.
On.
Yeah, Marty's traveling today, so
Jumping on the go.
On the go. How's it going, Michael? Hey, Joel.
Hey, how's it going, Ryan?
Good. How are you doing?
Ready for some compliance. That's what.
Well, very good. So thanks for jumping on, everybody. I'm sure we'll, we got a pretty steady stream of people joining us right now, but appreciate you guys taking the time. I wanted to let you guys know that this is going to be the first of what we hope is many and, a weekly kind of occurrence with Ryan and some of our various legal partners for more than anything, a compliance and legal call. We're going to cover a couple of different topics today, and then we will be answering questions, obviously, kind of going from there. Ryan is largely going to be hosting this call and sort of facilitating it and I guess moderating it. We've got Marty, who is joining us today. Marty Tate, sounds like he's on the road right now, but appreciate you making some time, Marty. If you guys do not know, Marty is one of our preferred legal partners in the member portal. You can find him under the Kunzler, Bean, and Adamson module. So I assume we'll probably continue to have people trickle in here, but Ryan, I'll kind of let you, take it from here and facilitate this, and I'll just sort of be in the background helping out.
Awesome. Fantastic. Thanks, Stockton. So I'm super excited about this office hour because I think it's the legal and compliance that is the nuts and bolts of putting together a fund. So I think you have to have a basic understanding of what you can and can't do to help define your thesis and your target audience. So I'm really excited. So my name is Ryan Working. I am 4th generation oil and gas. I own an engineering firm. I buy oil rigs to plug wells. I invest in oil fields in Texas. I've raised capital through Reg CF. I've done a Reg D 506C fund. And then Marty and I actually put together the first oil and gas Reg A plus fund together. So that was pretty exciting. I
Yeah.
Can you mute that? Thanks. So I passed my Series 65 in 3 weeks, and please fact check me on this, but I think at one time I was the youngest chief compliance officer in the country with an SEC RIA managing a Reg A plus fund. So that's my introduction. So when I first started on this path towards, starting my own funds, there was no fund launch. There was no black card. And so I was reading SEC regulations. I was watching YouTube videos. And this is how I, was introduced to Marty. Every time I was looking at YouTube videos, there was a panel of people. And every time a difficult question came up, the whole panel would turn to Marty. And he was the just authoritative figure in the room every time. So I flew out to Salt Lake, met with him, told him my ambitious plans, and he's been my trusted SEC attorney ever since. So Marty, if you don't mind, could you just share with the group, what your firm does, your background, and some of the people you've worked with?
Yeah, happy to do it. So Marty Tate, and I apologize, I'm literally going to be changing backgrounds as I'm doing the call on my phone. But so I've been a practicing SEC lawyer for going on 24 years. Most of my time, or most of that time, has been spent doing public and private finance. I started my first fund when about 18 years ago, a company called Harbor Capital. We grew those funds. We had multiple asset class funds, grew those to over 200 million. I was general counsel and a managing partner. We were heavily invested in real estate, and that when the real estate market collapsed, I kind of took that portfolio and book of business back into private practice, where I've been since 2010. And since that time, I've put together over 100 funds. I've done public offerings. I've done Regulation A offer. I've done several dozen Regulation A offerings. I've done a lot of Reg CF deals. I was actually involved in the drafting of the Jobs Act and regulation crowdfunding. So I've been kind of on the forefront of that ever since the beginning. I've had the chance to work with folks like Ryan and others in a lot of different asset classes, a lot of different, everything from real estate to venture to oil and gas to swaps and derivatives and foreign exchange, Forex assets. So we've done a lot, and just, happy to be on the call and answer questions.
Awesome. So kind of the way I would like to break this down is I like to ask a couple questions I know that are relative to a lot of folks on the call. And then after that, open it up for Q&A. So that's kind of the structure I see. So I've been on a lot of different office hour calls. I've talked with a lot of you folks individually. And the topic always comes up about capital raisers. So in the fund launch formula, we have the deal expert, the fund manager, and this capital raiser category. And I think it gets a lot of attention, one, because everybody wants capital, but also there's a lot of just tricky laws that you have to work with. So the topic of this call is what you can and cannot do to compensate a capital raiser. So I've personally tried to come up with all these creative ways to get around the broker dealer laws, and it's pretty straightforward. So Marty, I wanted to throw it back to you because I know this is an important question, but when it comes to, compensating somebody that's a capital raiser, can you speak to what you can and cannot do?
Yeah, and this is a question I honestly, I feel like I've been asked at least once a week for the last 23 years. How do we compensate this person that's going to help us raise capital? Sorry, I'm getting an echo there. So the plain and simple answer is, unless that person is a broker dealer, they cannot be compensated for raising capital. You have to be a licensed broker dealer to raise capital on behalf of a third party. So if you are putting together a fund, if you are doing a private placement and you have somebody in your network that says, hey, I'm going to go out and help you raise this capital, or I can bring in some guys, how can you compensate me? Unless they're a broker dealer, the baseline rule is you can't compensate them. Now that's kind of where we'll start. And generally that's the answer. However, there are some exceptions or ways that you can do it. First of all, and the most common would be the finder's exemption. There was a case back in the 1980s that's remained law to this day, the Anka case, and it basically said that an issuer, so that's a fund or anybody that's raising capital, can pay a third party a finder's fee for bringing in capital. Now there's some strings that are attached to that. The finder's fee has to be paid. It can't be contingent upon them raising capital. It can't be a percentage. It can't be a commission. It can't look like a success-based fee. It's basically saying, I'll pay you $1,000 for you to introduce me to, these 10 people. It has to be a fixed fee. And again, it can't be contingent on them actually doing anything. It just has to be paid regardless of whether they're successful or not, or whether the people invest or not. So that's the general, finder's rule.
So Marty, I've got a question. So there's some pretty well connected people in this group. So like, I'll just give a couple shout outs. Like Eliza, she's in LA. She's plugged into the celebrities, Hollywood, professional athletes group. Some of my favorite people in Black Card is the Griswold family. You see Michael and Wayne right there. And so they've started a group called Accredited Capitalist Group. So I think in the Accredited Capitalist Group, correct me if I'm wrong, Michael, Wayne, but it's basically you're setting up local chapters all throughout the country of you have to be accredited to be part of the group. Right. And so you should hear some of the stories that Michael's sharing. He's on the phone with family offices, ultra high net worth folks. And so basically, if I was an emerging fund manager, I'd want to align with people like this, maybe giving them a small percentage of the GP or some kind of compensation for basically just introductions. It's not based on a success. It's not a success-based fee, or it's not a percentage of the capital. It's really just a introduction fee. Does that sound reasonable, Marty?
Yeah, so that would classify as a finder's fee. Now, you touched on another way that people can do things, that people can, I guess, compensate third parties. So if you're a member of the GP, obviously the GP is their job is to go out and raise capital for the fund, right? As well as make the investments and manage the investments. And as part of that, because that's part of their job description. So if you're part of the GP, you can go out and raise capital. So that is one way I've seen people sort of deal with that, is they'll say, hey, we'll come in and we'll give you part of the GP. We'll give you, whatever percentage of the GP, we'll give you 5% or some equity point for you to make these introductions. Now, you have to be careful there, because again, it can't look like a commission. It can't be based on success. It can't be a percentage. One of the things you say is, well, listen, the percentage that they get in the GP is based upon how much money they raise, or the finder's fee is based upon how much money they bring in. Neither one of those will work, because that looks like a commission.
Mm-hmm. Yep. Hey, Vu, are you on the call?
Yes, I am.
Hey, Vu, what's going on, man? Hey, I've heard you structure some things with clawbacks. Can you kind of talk about some of your structures with clawbacks and how you set that up? And I just want to bring that up for this capital raising topic.
Yeah, so for me, if I do any business with anybody, I always put it in a clawback clause on there. Why? It's because if I don't perform, I think that I don't deserve any type of equity at all, or any type of compensation. And I think that's just fair to actually kind of add in when you guys are doing deals with anybody, is, put a clawback clause on there, because it's better to claw back the equity or some sort of compensation than going in there and promising somebody something and then they just sit on their asses. And that happens, right? Like, you don't know who you're dating until you go on a couple of dates before you want to ask them if you want to get married. But putting a clawback clause on there, maybe even adding some phantom shares or whatever it is that you guys want to add. There's a lot of different creative ways, but I would always highly recommend putting a clawback clause on there and putting some sort of structure in there that they have to perform. If they don't perform, they don't deserve it.
So I bring this up because, part of the capital raising issue is it can't be success-based. And when you put a performance metric on the clawback, how does that tie into, is it a success-based fee? Is there any, Marty, do you see any kind of issues with that?
So I have seen that done before, and I think that's a little, we're definitely operating in grace right there. What you're doing is you're saying, hey, we're going to give you this equity up front for being part of it. And kind of a way to do that is basically maybe not calling it a clawback, but having a vesting or having, the ability for the company to buy back the equity at at a at a dollar or something like that. It's not perfect, but it's not but it's definitely in the gray area. I haven't seen that type of thing necessarily contested. And one of the things I want to back up on this and say, okay, so what is the risk? Right? Because all of this is like, I can say, hey, that's illegal, but we have to, as a business, somebody that's managing a fund, somebody that's operating a business, you guys have to weigh risk and reward. So what is the risk of, let's just talk about so the high level risk of using an unlicensed broker is that, one, the SEC could come in and, when you file a Form D, they ask if you use anybody to help you raise capital. They'll also, a lot of times, state regulators will look at your fund and they'll want to know how you raise the capital. So there's sort of this regulatory risk. But the other risk is that, and that could come with fines, that could come with cease and desist, it could come with a censure. So all of those things are serious. And, and it not only hurts the unlicensed broker dealer, but that can also affect the company. But the bigger risk is that some investor invests and says, and maybe something goes wrong. Maybe they don't like maybe the fund isn't as successful as they want. Maybe maybe it underperforms. And that investor is looking for a reason, despite the fact that your PPM says there's all these risks and there's all these, you could lose everything. That investor with a creative and good litigator on their side could come in and say, well, let's dig a little bit and say, okay, how were you brought in? And said, well, this guy, Jake brought me in and was Jake a broker dealer? Well, no, he wasn't. And so they could bring that in as a claim against the fund. And the remedy for that would be if you engaged if you used an unlicensed broker, they could seek rescission on behalf of all the investors. So the stakes are high in those situations. However, so I'm going to go back to the question about the clawback. I think that's a gray area. It could be seen as a commission, but the likelihood that that's ever going to be questioned is probably pretty low. I don't think it's bulletproof, but it's defensible. Mm-hmm. So in the case that if a regulator or a litigant, an unhappy LP came and brought a claim, I think it's defensible. So sorry, that's a really long-winded answer for a short question.
Yeah. So Ryan, so I kind of put some more depth into it. We never, kind of answer Wayne's question too. Yes, you cannot write any contract that says any kind of type of compensation for the amount of performance, period. But what we do is at the target of what the total fund is and where they are at in their fund total is how we actually structure it. So it's never in a way where we say, if we raise X amount, then we get this much. And if we don't, then we get clawed back that. We don't ever do that at all. And that was suggested by our attorneys. Because so when you get into that performance ways, and that's just how it is when it comes to even for loan offices, you can't pay somebody that's not licensed unless they're licensed. You can't compensate them. Mm-hmm. But you have these marketing companies that get them a lot of business. But yes, we don't structure it in a way where we say, we're going to raise and promise you $15 million for X amount.
Right. Okay. At this point, I'd like to open it up for open Q&A, but I know Wayne put a question in the chat. I'm just going to read that off, Marty. So he asked, can a co-GP position be contingent on raising a certain amount annually? such as an annual review of capital raised, and if the target is not met, you can be removed from the GP. What are your thoughts on that, Marty?
So I think that looks, I mean, to me, that looks like compensation, right? You're basically making it contingent upon their compensation, which is the GP interest. It's contingent upon them raising capital. So one of the things I would do, and I think that I'm sorry, is it by who was it that was, I didn't see the name of the, and we've met before, the gentleman that was just speaking.
Wayne?
Boo.
Wayne, I'm sorry.
Boo. Yeah. Boo.
Boo, there we go. Thank you. So I think Boo said this correctly, is that, you know, what you could do in that situation is bring them on as a GP, have performance goals that aren't related to capital raising, but, you know, have a, again, this is not great legal advice, but as long as it's not in writing, but that's one of the things that you're thinking about in their sort of performance, overall performance is, you know, their ability to help raise capital. I definitely wouldn't pinpoint it on a specific number, but, you know, say their job is to make capital introductions, identify possible investments, you know, whatever sort of this list, and there could be a performance review at the end of the year. I think that's the way I would structure that.
Hey, Lincoln, what's going on, man?
How we doing?
Doing great.
Good. I just had a couple comments, thoughts that, you know, I think would be good. You know, if we covered here, you know, some other ways, you know, like with W-2 employees, you know, helping facilitate fundraising where someone's on a base pay, you know, plus, you know, incentive bonuses versus 1099s versus board members versus investment committee members. So you know, I think those are common questions that a lot of people have that I think would be good if we kind of go in depth a little bit on as well.
Awesome. Marty, did you get that?
I did, yep. Yeah, so I think that those are great ways to do that. Obviously, within the GP, they can be compensated as W-2 employees. They could be compensated as consultants, you know, and 1099 employees. I think the key, and we can hit on this, is that they just can't be compensated. Their role can't be capital raising, and they can't be compensated based upon, you know, their success in raising capital. But if they're a W-2 employee, they have a salary, and part of their job is, you know, again, doing due diligence on investments, but also, you know, if there is a bonus paid for bringing in investors or introducing investors, again, I wouldn't make it contingent upon the amount. Like, you know, you get 1% of the capital you bring in, that doesn't work. But, you know, if they're getting bonus, you know, some fixed fee for making introductions or something. The other thing is that if they're only raising capital for one entity and they work for the issuer or the GP, they can go and actually take a Series 63 or 65 and become licensed as what's called an issuer agent. And as an issuer agent, they can be paid a commission. So if you want to bring somebody on board and they want to get a Series 65 or 63, they can actually be licensed in the state as an issuer agent and can go out and raise capital. The issue there is they can only do it for one entity at a time. They can't do it for multiple entities. So that's another possibility there.
Interesting. Awesome. Cool. Anybody else have any questions? Eliza, do you have any questions? Oh, asked to unmute. There you go.
Okay. So basically, I know it's a very it has been my dilemma ever since. Like if we were going to be doing, I want to get into different kinds of funds, but it's the best way I know is going to be a fund of fund model, correct? It's because I know you mentioned something about like just connecting. How do I get paid if I'm just going to be connecting them and not getting into their funds or not investing into their funds? Because just kind of like connecting them.
So I think the two main points is your compensation can't be based on a high level, can't be based on the percentage of capital raised, and it can't be success based, right? So if you said, hey, I'm going to charge a flat fee for X amount of period, I'm just going to introduce you to as many people as possible, I think that would be allowed. Something like that.
Yeah, that would be allowed. Yeah.
Okay.
Yep.
Thank you.
Yep.
If I could add some color to that as well. Like you'll see there's a lot of unique, capital, fundraising solutions on the marketplace. Like you'll see, agencies, right, that function essentially as capital raisers, except they're going to charge you $2,500 to $5,000 a month on retainer, and they're going to get you a certain number of leads, right? And their compensation is not correlated to how much capital you end up raising, but they're going to help you on the front end of your investor funnel by getting you leads, right? So there's consulting fees, there's marketing fees. I do GP stakes, so I come in and I partner with these general partnerships, except I don't say, hey, I'm going to raise you money and it's going to be worth X% of your general partnership. No, I'm going to provide consulting, and as a kicker, if I end up presenting, giving you guys some more, some cap intros, great. But my primary, business function is consulting. So, it's just it's a lot of the nitty gritties, right? And you just have to be careful about how you're presenting different offers and making sure expectations are set. And that goes for all positions that are, getting incorporated. So sorry to interject there, but just.
Yep. Thanks, Lincoln. Lena, do you have a question? Oh, 1 second.
Okay, yeah, I'm back on. We're a dual country, Canada-US fund, and we're doing capital raise in Canada. So I just wanted to ask Marty if it's similar, if you know about what we can do on the Canadian side, what the compliance aspects there are, and if they're very similar or the same. Thanks.
They're very similar, if not the exact same. And one of the unique things about Canada is each province is slightly different, but for the most part, you're still required to be licensed as a broker dealer in Canada. The finder's fee rule, I don't know if that's based upon a U.S. case law. It's not actually a U.S. law, and so I don't know if Canada has something similar, but I suspect they do.
Okay, because it's exactly on that aspect. We've been in touch with EMDs, they're called EMDs in Canada, except market dealers in our case. And so I was just curious about the finder's fee of the introduction type of activity, how that could be looked at. Okay.
Yeah, and again, I think that it's similar, and I actually am familiar with that concept of an EMD, which is basically a finder.
As another question, can we hire let's say a lobbyist or, on fixed fee? Is that possible?
So a lobbyist to go out and kind of spread the good word about your company?
Yeah, so the person would be compensated as a regular salary, a fixed fee.
Yeah, excuse me. Yeah, absolutely. And that concept, I think, is fine. It's sort of almost like a brand ambassador. If they're getting paid, again, the key is how they're getting paid. As long as they're not getting paid a compensation based upon success or a commission, and that's fine. If they're getting paid, a flat fee to go out and be a brand ambassador, to lobby on behalf of the company, or to try to attract investors, that's great. I mean, if that's their job, is to reach out and try to bring people to you, that's not a problem, just as long as they're not getting paid based upon any success or it's not structured to look like a commission.
All right. Could I pay the person I don't know, I have a residence in Florida and I can tell the person, okay, you can use my residence, I don't know, 1 month a year. So will it be like a fixed fee, a compensation?
Yeah, I don't think that would be a problem at all. I guess where it would get problematic is if you said, you get a week for every $100,000 you raise, then it would look like a commission. But otherwise, yeah, I don't see that being a problem.
Okay. Good.
Thank you. Awesome.
Hey, Joel.
What is the public policy wrong or thing that they're trying to prevent with this layers of rules about people that help you raise capital? I mean, was there a history here? Was there like one event that defined it, that made Joe Kennedy in 1930s, make this such a pain in the rear? I mean,
well, so I think that ultimately the SEC is trying to protect investors, right? And I think that if they have broker dealers acting as a gateway, as being the only group that can get paid to raise capital, and broker dealers have to go through licensing and have to go through regulatory exams and so forth, that allows them to put some sort of control on who's out there who's out there engaging with these investors. It seems like every time you see sort of this a Ponzi scheme or a bad investment, there's always unlicensed broker dealers. There's always guys out there that are hitting up their church members or their parents at the school for this chance of a lifetime investment, and those guys are always almost without a fail, they're not licensed broker dealers. So that's really, I think, the history behind this.
Yep.
all right, thanks.
There is a question, Marty, in the chat that says, with the Series 65 license, is there a way for you to charge commission for multiple funds?
No, there isn't. So what I was referring to is that issuer rep exemption, so an issuer agent, but you can only be engaged with one issuer at a time. So I guess you could go and do it for one fund and then go and be employed by another fund and raise capital for them, but it's really only one at a time. So you can do that. So under that exemption, otherwise, you'd need to have a Series 7, which allows you to actually go out and work for a broker dealer and raise capital in that way.
Marty, can you expand upon that? So there's a couple different licenses you mentioned. There's a Series 63, a Series 7, and do those have to be parked or underneath a broker dealer to go raise money? Is that what you're saying?
A Series 63 doesn't. You can kind of quote unquote park that with an issuer and be an issuer agent. But a Series 7, you do have to be with a licensed broker dealer. So you would be a what's called a licensed rep of that broker dealer, and then you could go sell through that brokerage house.
Okay. Fantastic. All right. Is any other questions from anybody? Okay. Yeah, go ahead. Eliza?
So to get compensated, comfortably and not to really have to ask for commission or anything like that. Are you saying that it is safe for us to just get the Series 65 license, or does it really matter? Or can you elaborate on that, please?
Yeah, sorry about that. So the 65, again, is only going to help you raise capital for your own. Really what that benefits is, if where I've seen it used is, there's one company that they're, it's a real estate fund that we set up, and they actually went out and hired a bunch of people who were licensed, had their Series 65. They hired them as employees, but they were licensed with the state as issuer agents, and so they were able to go out and raise capital for that specific entity. But it wouldn't do you any good to do that if you were trying to go out and raise capital or help other people raise capital. You really need to be licensed as a broker dealer, which is a Series 7.
Marty, Lincoln asked the question in the chat, and he says, I've seen people incentivize current limited partners to make introductions and referrals by offering discounted management fees in the event they refer someone who invests. Does that fly in your opinion?
I think that's okay, because as long as you follow that same structure, right? As long as the discounted management fee isn't contingent upon people investing. I mean, if they're just making introductions, right? So it's the same as sort of the finder's fee, and it's not a commission. It's not like, hey, for every 10 people that invest, we're going to knock our management fee down a point or something like that. So you kind of have to follow those same rules. It can't be a commission, and it can't be success-based.
Got it. Okay. So if there's no more questions, I know Marty, you're on the move. Maybe we'll end this week a little bit early, but I want to, Marty, thank you for your time. Can you, give a update? Are you guys taking on more clients? What's your availability, and what's kind of the best way for people to get a hold of you?
Yeah, of course, we're always, we won't turn down, the chance to work with good people. And so, and the best way to reach me is my email is mtate@kba.law, or, yeah, that's probably the best way. I was going to give my Twitter handle, but I can't remember what it is. So.
I also just sent off in the chat, everybody. That's the link to in the member portal, our section with Marty and KBA for kind of some more information there.
Awesome. So thank you, Marty, again. So next week, I'm super excited about this new office hour. So next week, a common theme that I've seen is, one, do you need a Series 65 license? Can you charge a management fee, or how do you do that? And what is an exempt reporting advisor? So next week, Tuesday at 1 p.m. Eastern time, Marty and I will be on the call. And then actually, I've got another bonus for you guys. On Thursday, Dan Doxey asked me to fill in for him. And I'm also going to bring on my good friend, Layla. She's the CEO and founder of My RIA Lawyer. She's an expert with compliance. She helps compliance with billion-dollar funds and also with emerging fund managers. So she's going to come on and help answer questions too on, hey, if you really want to get your Series 65, if you really do want to become an RIA, what does that look like? So that's what we got next week.
Sounds good. Appreciate it, Ryan. Thanks for jumping on, everybody. We'll plan on seeing you then, and yeah, look for more announcements to come.
Okay, great. Thank you.
Thanks, Marty. Appreciate it.
Thank you, Marty.
Thanks, everyone.